6630. Oliver Slope, Blue Line Futures, is here to talk to us. And Oliver, first of all, I've watched here as these markets, led by the corn, just kind of seem to be weakening here just a little bit.
Yeah, and corn has had, the fundamental headwinds working against it here over the past couple of weeks, and I think that's probably going to continue into tomorrow's USDA report. We all obviously know that there's a big issue with ethanol plants shutting down, and that takes away a lot of potential demand to kind of prop the corn market up. So I think rallies here in the near term probably will continue to be sold into. Saw a little bit of consolidation late last week, and that's potentially setting up to a little bit of a bear flag. So we wouldn't be surprised to see a retest of the lows in that May contract, 332, and possibly below there. But I think once we get past tomorrow's report, which I think for the most part people are expecting that to be a little bit bearish, I think that you're going to have a lot of the bad news maybe priced into the market. And everybody knows about the ethanol, and then once we get through tomorrow's report and prospective planting acres, everyone's going to know that, potentially staring down 94 million acres. So what more bad news can they throw at this? I'm not sure. Maybe we stall out, and that can spur a little bit of short covering. But with that said, I think producers are going to want to take advantage of those short covering rallies to sell into, because I do think the upside will be limited here in the near term.
Oliver, you made a good point here, and that's the fact this ethanol story just is really weighing heavily on this corn market at this point. Is there anybody talking about reading a little bit of caution into tomorrow's corn planting intentions? It's up there around 94, 95 million acres, and that's the average of estimates. So is anybody talking about, well, if corn's going to hang around down here in this 330, 340, 350 area, does it really bode planting that much corn?
It doesn't do a whole lot to incentivize a whole lot of a planting, but at the end of the day, the American farmer loves to plant corn. And so I do think that there will be a large amount of acres, if it's 94 million acres or 95. No, I'm not really sure, but I think expectations will be somewhere in that neighborhood, and that will keep the upside somewhat limited here in the near term, despite the issues that we're having in the ethanol industry that'll keep a lid on corn prices here in the very near term.
You feel the same way about soybeans around that 85 million number?
Soybeans have been a lot more constructive, I think, fundamentally and technically. We've kind of been consolidating for the better part of the last week. Last Monday, we had a big up day, and then we've just been trading around in about a 30-cent range in the back half of last week and even the start today. And I think they're shaking out week longs and week shorts. Right now, it's kind of the inverse of corn. We're consolidating and forming potentially a bull flag. So if the bulls can defend support, which there's pretty good support all the way down to 860, I think they remain in control. $9 for that May contract, obviously psychologically significant. It also represents the 50% retracement, or basically the middle of the range from the recent highs to the contract low. So that's going to be a big pivot area. If we can get a friendly report, get out above $9, I wouldn't be surprised to see money flow step in and push this thing a little bit higher towards 920.
Okay, Oliver, we'll talk livestock. That's straight ahead here on the Market Dave Report. Stay with us.